Hey, James and Zoe. Shall we get started?
Let's do it.
Awesome. Sounds good. You want to take the lead?
Okay, sure thing. Welcome, everyone. Welcome to our AMA on Solana and our Solana Index Ecosystem Token called SOLI that we are launching early 2022. I think this is a great session if you're interested in crypto in general, whether you're a beginner or you're someone quite adventurous and an expert already in Solana. Maybe some background here. This is a panel. We're going to have our partners on to answer some of your questions, to really promote and familiarize you with some of the protocols that will be in this product. But I guess the TLDR is Solana is probably the most successful blockchain outside of Ethereum today. We have seen what DeFi have done for Ethereum, and we have seen what index products like DFI and DPI and others have done for the Ethereum ecosystem. And we are very excited and believe in that it's going to be very important to have an index that is focused on Solana so that people who are interested in this ecosystem can essentially get exposure to the entire economic activity of Solana by owning a single token. And that's really what SOLI is about. It's one token to rule them all, if you will, for Solana. Maybe to zoom out a little bit, let's talk about Solana and why it is so interesting as a blockchain. There are dozens of L1s or layer 1 blockchains contending to be the best or to be a better version of Ethereum. And Solana has clearly captured like something of the zeitgeist of like people's interest as an option. And I think what's interesting about Solana is that it is not like the others. If you look at L1s broadly, you could maybe carve them up as the kind of Ethereum compatible or Ethereum clones, if you will, that's basically EVM compatible. And those are very easy to get to. Those are basically the same programming environment. You can just switch like a toggle in MetaMask and you're there. But fundamentally uses the same core technology as Ethereum. And then you have Solana, which is nothing like Ethereum. It's still a blockchain, but it is really nothing like Ethereum, and it has a few characteristics I think that's very unique, and that's what made it successful. For starters, it is fast. It is very fast. Like anyone who's used Ethereum and then uses Solana, it's like a broadband moment. And of course, there are contentious debates about how it achieves that performance, but the user experience performance is undeniable. Today, it hums along at about 3,000 TPS per second, transactions per second, versus Ethereum, which is like maybe 16 on a given day. The ultimate capability of Solana is maybe in the 50K TPS plus range. So it has extremely high TPS today and even higher TPS kind of in its roadmap as it scales. It is fast, not just in throughput, it is fast in kind of settlement time. So the user experience settlement time, so when you do a swap or deposit or something like that, is practically instant. On Ethereum, you click submit for a swap or deposit or whatever, and then you go on to Etherscan waiting for it to settle. In Solana, it basically just look at the page and it's settled. And it's that difference is incredible from a user experience perspective. The UX isn't just fast and high throughput, it's also extremely pleasant from a kind of wallet perspective. Anyone on Ethereum is used to basically using MetaMask, MetaMask is perfectly functional, but I wouldn't say it's friendly for beginners. It is also a little bit elementary. It doesn't give you a lot, and it isn't a warm and fuzzy user experience. There's a lot for you to figure out as a user. Solana has a variety of wallets. It's not just dictated by a single wallet, but probably the most popular one, Phantom, has amazing design and is just like a much more friendly and more polished user experience. And of course, the reason why people use non-Ethereum chains is that the Ethereum is just too expensive now. What used to cost $1 now costs $100, and some transactions cost many hundreds of dollars. So Ethereum has priced out a lot of users. That is the chief criticism as it stands today. And Solana, due to its architecture and due to the fact that it's still early, is extremely cheap to use. Practically everything costs less than a cent today. So very cheap and a great first step for people getting into crypto and DeFi today. I think maybe a year ago, if you ask people, what should we do as a new user on DeFi, the answer is going to be unanimously Ethereum. Today, you have to ask, how much money are you working with? And more often than not, the answer is you should probably start on a non-Ethereum chain, and probably Solana at that. And in terms of technicals, I think Solana offers a very compelling vision for architecturally what a chain could look like to scale as we head into the future. Ethereum is headed into a very different future than the Ethereum that we are used to today. The Ethereum that we're using today is a single monolithic chain using proof of work, but it will switch to a proof of stake chain early next year. And increasingly, it will be using a sharded architecture, both on the base chain that will be sharded, as well as rollups that will be basically like a form of compression for transactions. So it's going to be what is currently a single piece will effectively turn out to be many different pieces, lots of rollups. Already there are dozens of rollups, and eventually lots of shards at the base layers. So it's turning into a very distributed and what other people call modular architecture. And this has many benefits. It helps it scale, it helps it decentralize in various ways, but it also introduces a lot of complexity. Solana's vision right now, at least in the near term, is a single monolithic chain, and one that scales as well. So it's not a chain that is stuck in this 100 transaction per second universe. As a chain, Solana's vision is almost like behaving like one fast supercomputer. So it operates as this one unified view, even though underlying it is many nodes. Whereas the Ethereum vision is a highly distributed set of clusters that kind of coordinate and compute in parallel. So for I think all those reasons, those are my reasons. I'm sure other people have other reasons why they're interested in Solana, that I think that makes it both technically as well as economically and from an application perspective, very interesting. This is a good point to maybe ask either Ellie or Zoe to jump in to see if they have like their take on like what got them interested in Solana.
Yeah, no, definitely. I think a lot of the things you said, James, resonated with me as well. Just like a smoother user experience, not just like in terms of speed, but also in terms of like cost of transactions. And I think the on-ramp is a lot easier than a lot of other layer twos that you see nowadays and other layer ones, where because of Solana's connection with FTX and the on-ramp experience is just like a lot more consistent and a lot more user-friendly versus if you wanted to like on-ramp onto like Arbitrum or Optimism. So that's definitely one of those things. Another thing that I really like, because Solana isn't EVM compatible and it's based on Rust, a lot of like the developers haven't made it particularly easy just to fork projects off like Ethereum and copy them on another chain, which we've seen along on a lot of other layer ones. So the like innovation or the building community and the type of projects that have materialized on Solana is unique and more innovative than like most of what you see in other chains. So I really enjoy that as well. Just like seeing the type of innovation that is being brought on the Solana chain. So yeah, those are my two draws into working with the Solana ecosystem.
Yeah, definitely the largest thing is the speed and just the efficiency. When you talk to people that aren't really into crypto about Ethereum, they're like, what do you mean I have to pay $50 fee that is no use? And it's a gas fee that no matter if I'm trading 1 penny in Uniswap or $1 million, it's still the same fee. You know, it kind of just doesn't make sense. Why is it so much? And Solana, it's you click a button and it's 0.0001 SOL. You just don't think about it as long as you got some SOL in your wallet. And so it's a lot easier to explain to traditional people. And like you said, onboarding.
Yeah, definitely from being at Solana Breakpoint, like the Solana conference earlier in November, and being there in person and seeing the different kind of teams and the different kind of founders developing in this space. It's quite inspiring being able to talk to the different founders and to see their vision and their reasoning behind building on Solana, and the developer experience is also, I think, another plus for people building on Solana.
So maybe I'll share a few stats just to give people context on Solana. So Solana as it stands today as a chain and a token Solana's market cap today is about $50 billion, making it the fifth most valuable crypto asset today, versus Ethereum at about 500 billion. So it's still very early. I think this is also part of the compelling case for Solana's entire ecosystem as an investment. Solana is roughly a tenth the value of Ethereum, and it's already outputting a higher number of transactions in terms of throughput than Ethereum. And it's definitely, as Zoe said, gathered its own very unique and differentiated developer set. So number 5 in terms of global value rank. In terms of kind of activity, we have all these chains, and what makes them useful is whether there's economic activity on them. So the primary measure for that is like total value locked, is a measure of DeFi activity. So in TVL, it's currently ranked on DeFi Llama as number 4. It has about $12 billion in TVL locked versus Ethereum at about 160, Binance Smart Chain at about 16. So it's Ethereum, of course, we are like in its own league, but among all the other chains that's competing with Ethereum, BNB, which is very close fork of ETH, 117 billion. Luna right now is sitting at number 3 at 13 billion. Basically, number 4 at about 12 billion. AVAX is also at about 11 to 12 billion. So right up in that top tier of competitors vis-a-vis Ethereum. What's interesting, I think, here is that Solana has a very healthy number of applications. So while Terra or Luna is dominated by about 11 protocols as ranked on DeFi Llama, Solana has 40 applications. So it's not just like Anchor protocol and a few others really dominating the design or the economic activity. Solana has a very healthy ecosystem. This is also why we were very excited to build a index token for Solana. To do that, you need protocols to select from and protocols with deep liquidity, or else it will just not work. I think that's also a key reason why I think Solana is at an interesting point and at a good point to build an index.
Yeah, definitely. We have a couple Solana projects on here. Should we have them maybe explain why they picked Solana, explain a little bit about themselves?
Let's do it.
We got the head frog here from Tulip. You want to explain a little bit about Tulip?
I run Tulip Protocol. We're a yield aggregation platform. We also offer leverage farming and also lending. I've been playing around with Ethereum DeFi for a long time. Like I was there farming YFI at the start too. So a lot has changed since then. And then for like the average user, like Ethereum's literally unusable. You can't do anything on it. So which is why we started experimenting on Solana on, I think back in March, I think, when there was maybe like 2-3 taps back then. It was like Radium and then Serum. That was pretty much it. It's been a long journey, but it's really nice to see all the growth in the ecosystem. And as more building blocks in the ecosystem comes in, combined with the throughput for Solana, it'll be interesting to see how we can apply some of the more interesting strategies towards yield aggregation.
Sanix, could you maybe share some stats on like how I think about Tulip as a protocol? Curious which other protocols you integrate with as a yield aggregator and where you're seeing the most growth today.
We used to primarily do 3 venues, which was Radium, Orc, and then we stopped doing Saber because there was a lot of like changes in their protocol and farming strategy wise, so we just decided to work on Orca instead. We also offer a lot of leverage on a lot of farming pairs, and then we recently just introduced a dual borrowing system where in one leverage position you can borrow both sides for your LP, which makes people like a lot easier to access delta neutral. And the best thing about it is it's pretty cheap to adjust your position. You can do micro adjustments pretty often and basically pay nothing in transaction costs. And I think that's like pretty important because for a beginner, you're more prone to make a lot of mistakes. Having a little bit more leniency and having to adjust your mistakes, it's always better than Fifi being very punitive.
Yeah, I have to say I'm a huge fan of your UI because having like seen a bunch of other leverage yield farming protocols, like I think Tulip was my first interaction with one where I'm, all right, that's how it works. Whereas a lot of other like leverage yield farming protocols, you're just putting in leverage and you don't really have a good idea or good understanding of the amount of risk you're taking. But yeah, Tulip manages to simplify that, and you're really straightforward way. So yeah, I love your UI.
Thanks. Yeah, we personally, like me and my team, we've all used like Alpaca and Alpha a lot. Like not just as like research, but like we used it like extensively in the past for like our own strategies and stuff. So we find out it's always better to just go the extra step in the UI. So basically, it saves us time in the long run because there'll be less like operation expense. That's always what we
Yes.
try to go for.
Yeah, awesome. That's a great overview. We got 𝔬𝕚𝕚𝕚𝕚, is it? From Solend. Do you want to talk a little bit about Solend and why you chose Solana?
Exodia for people who used to watch Yu-Gi-Oh growing up. So personally for me, I think of the team, I'm probably the newest to Web3. Personally for me, I think I have a lot of opportunities to get into crypto since 2017. Like a lot of companies I was talking to, some friends doing a lot of stuff. And yeah, every time just like when I would do some research into it, I try Ethereum. It just didn't give enough of an experience for me to feel like this was going to get any mainstream adoption like yet. And I think recently, earlier this year, when we started talking about creating Solend, and the people I'm working with, they started talking about Solana, and I gave it a try. It's the first time there was that click, like, wow, like this is gonna get huge. And yeah, like for personally, how I feel, like I'm very pragmatic when it comes to the crypto space, and I just do think that user experience matters a lot, and there's a lot of the deeper nuances that you guys talked about. So this trade-off Solana makes, there's kind of time to figure that out. So I just jumped on this and talking about Solend. We started this kind of mid 2021 and just started building a lending protocol. I think a lot of things with building a lending protocol is just doing the small things right, making sure the small decisions are made well, that the platform is safe, simple, understandable UI. And yes, we've been ironing that out earlier this year. Just launched our liquidity mining, launched our IDO, and yeah, just going forward, just a lot of exciting stuff in our roadmap. Isolated pools, permissionless pools, stuff like that.
Awesome. Yeah, it's definitely exciting. It's great to see the projects being built on Solana. I was assumed early no one would use it since it's not easily forkable and like the audit structure's not there. Everyone will audit the EVM compatible stuff. But yeah, it's great to see the ecosystem growing.
I was just going to say that I'm looking at your webpage, and I think you have some amazing investors as well. You have Stani, who's the founder of Aave, investing in Solend. You have Antonio, DYDX, investing, and DCF God. Very cool. This is a very interesting set of investors.
Yeah, certainly they were like a big part of me joining, first of all. Like, it just gave me a lot of confidence. And I also kind of see like the kind of confidence it would give other people having these people behind us. And yeah, just like been always getting a lot of really like great mentorship and advice from them.
Yeah, I really also like that you guys recently integrated like Wormhole ETH as one of your money markets, which I don't think any other lending and borrowing platform on Solana does at the moment.
Yeah, I think one big thing we're now like really invested into is integrations, and I think that's where like the investors really help too, and connecting us with the people to get this stuff going. But yeah, certainly incorporating stuff like Wormhole ETH, building like a world-class like developer portal to get more integrations, us working with more protocols is the goal, right?
I'm curious, what's your philosophy on what names you would support as a money market, two-way lending market on Solana? Ethereum, for example, the top protocols by TPL support maybe a dozen or so projects as collateral, whereas the more adventurous projects like Rari will go basically surf the whole long tail. How do you guys think about that at Solend?
I think 𝕚𝕚𝕚𝕚𝕚 will probably be the best to speak about that. But while we're trying to figure out how to get him to be a speaker, we're definitely very conservative on the main cross collateral pool. But we are really excited to support a lot of these newer, up and coming projects, and that's why one of the more immediate things on our roadmap is isolated pools and ultimately permissionless pools, where a lot of these like Invictus stuff like that, they can be in their own isolated pools, and people can get value out of those pools without risking impacting the main lending pool.
Awesome.
Yeah, we want to try to cover the full spectrum, basically. Have be the 𝕚𝕚 and also the 𝕚𝕤.
And is there anything about Solana as a like chain or its kind of tool set that makes it particularly suited to this kind of product?
I would say just like it prices out a lot less users. Like I think, I don't know, personally, I did mess around quite a bit with ℚ𝕦𝕚𝕚𝕚 on Ethereum and try the 99 stuff with 𝕚𝕚, where you would stake the ohm. And but that's obviously like very finicky and very like hands-on. And you don't necessarily want to do that too much, make too many movements of tokens on Ethereum. But I think with Solana, it would just be like a much more streamlined experience to dabble in and out of. And yeah, I think it'd just be like, I don't know if it's anything about Solana in particular, but just with with such a big developer support behind this chain, so many new projects coming out, it's just like pretty exciting to be able to build like isolated pools for them or permissionless pools so they can get more utility out of these tokens.
Great. Yeah, it all sounds awesome. Another one we have here is Ben from Mercurial. Ben, can you introduce Mercurial and why Solana?
Sure. Hi. Yeah. So actually, I represent actually Mercurial and Jupiter. So we're the same team behind Mercurial, which is an AMM for stables, as well as Jupiter, and Jupiter is a liquidity aggregator on Solana. I think there's a lot of reasons why people have chosen Solana. I think one of the powerful ones for me, which is related to the low gas fee, is just the ability to, I think someone said it earlier, which is like dabble. I think in order to reach the next audience of potential DeFi users, right, it has to be really easy and cheap for people to make mistakes and to try out and experiment. I think a lot of people on Solana are great. They're building really accessible DeFi interfaces and experiences. And I think that's really good, but there's still a ways to go. And for it to be really easy for someone to, with a small amount of capital, to try out things, get more familiar, get more comfortable before they really commit capital, I think is a really powerful thing.
And maybe just for background for folks who are not super like familiar with Mercurial, my understanding is like its core value prop or core use case is stable swaps from one kind of stable coin to another with very low slippage. On Ethereum, this is served obviously by Curve primarily, and this is very important, like core infrastructure for DeFi, because in the end, as you farm and switch from different kinds of stables, you need to be able to transact to perform that action without incurring like a grave cost. Do you guys, when you in your implementation, is this how would you say maybe pros and cons or any differences with the Curve style implementation or maybe some of the other Ethereum style implementations?
You know what? I would say we're fairly similar. We share a lot of similarities. We really looked at them pretty closely, actually, for a lot of the stuff that we did. It might be better to compare us against some of the Solana ones. Honestly, the other big stable swap is Saber.
Mm-hmm.
And I think the thing is that Mercurial, there's a couple things. Like one is that as a team, we end up building our own smart contracts or on-chain programs ourselves, rather than rely on some of the really good code that Solana has pushed out. But so what we did with our stable pools is that we actually built out, I think, a pretty neat thing, which is like the multi-token pool. So we can support up to 5 tokens per pool. And the goal there was to concentrate the liquidity versus a 2-token pool, right? You can concentrate liquidity. You can have a deeper, more concentrated liquidity on a multi-token pool. At the time that we launched, I think we're on mainnet end of May this year or early June. But one of our goals, because Solana was like super early during that time, was to help establish new stablecoins. So we were the first to bring UST over to Solana, and then also Parrot had just launched Pi, and we were helping them build up liquidity around Pi and help establish that as a stablecoin. And the nice thing is that, like with a multi-token pool, one of the benefits is that being able to we created a pool of USDC, USDT, and UST, and so that allows for like deep liquidity, low slippage transaction between those pairs.
Very cool. And I see, like you mentioned, it's the same team, you represent both Mercurial and Jupiter. And when you go to Mercurial's website, it clearly says like Mercurial Finance, also powered by Jupiter. So what is Jupiter, and is it some backend, and how should people understand what Jupiter fulfills for Mercurial?
Yeah, so Jupiter is its own separate protocol that we've launched, and it's a liquidity aggregator or a swap aggregator. Basically, it crawls all of Solana's liquidity. I think actually we currently have over half, almost all the liquidity in Solana, which is close to, it could be like, I think between 5 and 6 billion. And we basically find routes between every pool, like the best price routes. And it turns out a lot of the best price routes are like intermediary routes. So if you're trying to swap from one token to another, and most people could just go to the pool or the market that has that pair, and maybe they compare a different market or a different pool and they compare prices. We will find the best price route no matter where it is, and even if you get a better price hopping through an intermediary token. And this changes all the time because liquidity is moving around all the time. There's a lot of volatility. There's like price imbalances or price inefficiencies in especially in smaller markets actually. And so you see interesting things happen by routing through these intermediary things. So for example, when we integrated Aldrin's serum markets, or actually they have AMM pools and serum markets, right? Their liquidity is a lot lower than say Radium. But because at the time, I think their volume and it was pretty low and there were some price imbalances, it was actually cheaper routing through some of their markets, and you just get more tokens if you use them. The same thing with, we see ℚ𝕦𝕚𝕆𝕟 as a strong intermediary token. So if you're trying to get like a common thing, it's like USDC to SOL, it's actually cheaper to route through ℚ𝕚𝕚𝕝 or something like that. You can actually see it actually right now because it's cheaper to buy ℚ𝕚𝕚𝕝 directly from the market than it is to actually get it from Marinade. And this stuff happens all the time, especially with very volatile tokens. One of the nice things too about being an aggregator is that we bring a lot of volume to people that wouldn't normally have it, right? If you have a good market, or you could be a good route, or even if people aren't looking for that token specifically, if you can facilitate a good route, will drive volume. And that's what happened to a lot of AMMs, actually.
Yeah, totally. On Ethereum, I think if it's something very simple, I might go directly to a DEX, but otherwise I'm using either Matcha or 1inch, and it just gives you, peace of mind that you're going to get the best deal with all the different combinations of options under the hood versus just going like even to your favorite DEX. So that makes a ton of sense.
Yeah, and I think the thing that we're seeing is that a large chunk of Solana's audience came from, or originally got attracted to Solana through gaming or NFTs. They're not heavy DeFi users. And so like a DEX interface is a little bit too much for them. And Serum has some things that make it a little bit harder or less approachable to do. And a swap interface is just really simple. And so I think more and more people are just drawn. I think that's one of the reasons why a lot of people are drawn to Jupiter. Is just, oh, I can finally do all the trades I want to do because this is a really simple interface. We spend a lot of time continuing to make it faster and better and quicker to access new markets and new tokens that come up. So this is like constant, daily, ongoing work. The growth that we've been having has been pretty awesome. We launched Jupiter end of October, and we've reached already 2.5 billion in trade volume. And just yesterday, we hit 100 million in daily trade volume.
Yeah, that's super impressive.
Yeah, so I think it's a combination of a lot more people who kind of gravitate towards this kind of experience. And we really work hard to have a great user experience. But we also make sure that we deliver value. Like I think our aggregation is probably the best in Solana today. I think if you're trading on Solana, you should be using us, man.
We'd love to integrate you when the engineers figure out how.
Oh, actually, we have an SDK. We're going to be publicly, we've been sharing it with select partners. Senex and is one of them. but we'll be publicly announcing our V1 of the SDK soon. It's really cool. And what we have available right now will be an NPM library for the core. We also will have a React hook that you can use. And then we're working on an API version, which we should have soon. So it'll be really cool.
Awesome. Great info. Great info from everyone.
Maybe first, I think this is a good chance for Zoe to just introduce SOLI from her perspective. Zoe is a methodologist behind the Solana index, the ecosystem index, our token. Would love to hear her perspective on how she started making this, kind of looking through the available options and methodology, maybe some of our learnings with Pico, our last index product, which is our Polygon ecosystem index, and just maybe introduce the rough high-level view of the breakdown of what's inside SOLI.
Yeah, for sure. So I think a lot of the methodology for SOLI came from Pico and just like iterations of improvement of the methodology we use for that. But for those who haven't read our proposal, at the moment, our idea is that the weighting of the index is driven by two key factors, so market cap, DEX liquidity. And these are like two important factors where market cap reflects the size of the project and the potential, and as well as like its market share of the ecosystem. And then DEX liquidity is, as like Ben touched on, is just like essential for our mint and burn mechanisms. And without like adequate liquidity, we won't be able to swap in and out these tokens. And I think it's also a really good representation of like how actively traded the asset is, as well as like potential use cases for it and how actively it's used in the ecosystem. Yeah, two main things, market cap and DEX liquidity. And for the base kind of weightings, we started off with a 33% SOL, which is like slightly less than our Pico constituent with Matic. So this gives like investors who are potentially already invested in Solana and have some SOL to still maintain their position in SOL. And then the remainder of the index is across 7 or 8 projects at the moment, but with a potential up to 9. And the weightings for these projects is determined by, like I said before, market cap and DEX liquidity. So that's how we're planning to allocate the index constituents. And we're adding also some other factors which we feel is important. So one of the things is that it's Solana native. So we don't want to include a bunch of things that have existed on Ethereum for a long time and just been like forked and built on Solana. So they're like unique to Solana and it captures the projects on Solana natively. And then another thing is that the project must have launched for more than 2 months, and that's primarily to eliminate like transient, unsustainable, or even scam projects that just rise really quickly in TVL or market cap and then fade away. And then the next criteria is for the project to have DEX liquidity greater than 5 million. And yeah, that's like a quick summary of how we came up with the index. And we plan on rebalancing the index every month just to make sure that it's up to date and reflective of what the ecosystem is doing.
Very cool. In terms of composition today, we have 1, 2, 3, 4, 5, 6, 7 tokens inside the index, the anchor being the SOL token itself. The two largest constituents I'm looking at, I think everyone who's interested should check out our blog. You can find us at ℚ𝕦𝕚𝕚𝕚 on Medium. We go through the whole kind of methodology as well as the relative weighing of each of the protocols. And we publish this really in the spirit of getting feedback from the community before we finalize the product. I think big difference in kind of working Web3 versus Web2 is Web2 you build and maybe you get to product and then you ship and then you get feedback, whereas like Web3 you're literally building in the open, you're deploying in prod, if you will. And for an index, it works a bit differently. We can't really ship a MVP version and then iterate off that. So we wanted to share the methodology up front. So that's why Zoe has published our index construction and a feedback proposal. I guess one protocol we haven't quite talked about that's in the top 3 here is Serum. And Serum is also a key thing of what makes Solana unique. There's not Every other protocol here, we could point to a parallel in Ethereum, but Serum, not so much. So maybe explain for our audience, what is Serum and why is it such a kind of anchor piece for the Solana ecosystem?
It was definitely. Yeah, so for those who don't know what Serum is, it's like a fully on-chain central limit order book. And what it does for the ecosystem is it increases capital efficiency by providing this on-chain order book and shares like liquidity. They also have like power trading features for institutional and retail investors. And their main goals is to resolve like traditional problems of DeFi with like lack of liquidity, low capital efficiency, and like liquidity segmentation. And I guess for those who are unfamiliar, the Serum token gives governance rights as well as like staking, discounts on trading fees on the native platforms, and also allows you to earn fees. Yeah, I'm not sure there's something that's like that on Ethereum. There probably is. So I probably can't say on that front, but yeah, definitely a really cool project to watch out for, and like super excited to have them on the index as well.
Totally. I think the unique point about Serum is that it's like normally on Ethereum, you basically have different dexes with different pools of liquidity. And then the way you access them, of course, is to use these aggregators like Matcha and 1inch that will compare prices across all of them. Whereas on Solana, which is, I think, a chain that is very optimal for finance and DeFi, Serum kind of acts as this unified liquidity backend for everyone to integrate with. So Radium integrates with Serum, and so instead of having merely collections of fragmented liquidity pools, there's infrastructure on the back end to unify all that so that you get incredibly high performance and deep liquidity across the chain. It's kind of like different software have different specializations. I think this makes Solana very specialized and very performant for DeFi and finance.
Yeah, and I think while we're on like the index description and the constituents, I think one of the like glaring questions from our community in general is why is Orca or Saber not on? So our V1 of our product is integrating with Radium as like our prime like minting and swapping mechanism. But yeah, we would love to be able to integrate with something like Jupiter eventually and be able to include and aggregate all the liquidity across Solana.
So I guess version 1, Radium, and then post-launch, other DEX integrations.
Yeah, that's the idea, and we're hopeful for that.
Yeah, I would just share an interesting thing about Serum, and I'm actually doing a Twitter Spaces with them tomorrow too. But the really cool thing, and we posted about this on Twitter, is that they recently reduced their fees by half, and that was a big game changer from what we saw in our data. Basically, for small trades like 10K size trades and under, a lot of the AMMs like Orca and Radium just had better rates. So they took a lot of the volume. And you only really use Serum if you had to do a bigger size trade. They became a really good route for 10K, 50K, 100K size trades or more. But the fee reduction that they did was massive. What we saw was actually, like, if you look at our stats page and today, because we're pretty open with our stats, so we have a stats page, you can look at everything. Their 24-hour volume right now is like at 36 million, which they used to be at 8 million pre-fee reduction. And that's one of the powerful things about aggregation, right? Like even if, again, like people aren't really looking at your markets or looking to get a certain token, we can drive a lot of volume if it's just a good route to go through. And so it's just crazy. They've over 4x their daily volume just on reducing their fees. And talking with the team, actually, they had a nice mindset about it. We did an AMA with them last week. And their thing was, obviously there's competition, so everyone's trying to capture TVL volume. I think what was nice to hear was that their idea was that, like, if you really look at a longer time, Solana is still super early, and a lot more people are going to come on. And really, instead of trying to maximize your revenues in the short term or something, it's much better to really create bigger volume and really help create a lot more trading going on, which I thought was really refreshing. I don't know how many teams actually think out in the multi-year sort of time frame. But it was pretty cool. And
Ben, could you give some context? Maybe what was the fee in absolute terms, the fee reduction that they did?
I don't know it off the top of my head. They have different tiers depending on if you hold their serum. So if you hold mega serum, kilo serum, and then if you're a maker taker, and they haven't, and if it's volatile versus stable, but I don't think they haven't done the stable side of the fee change. So it's a little bit involved.
No worries. Makes sense.
Yeah. But it equates to half.
Got it. So half reduction. Tyler, should we do some AMA?
Yeah, definitely. We'll take some questions now. If you want to ask a question, raise your hand, and then we'll take note of people's questions and then determine the 3 best, and then they will each get 100 USDC per the tweet I sent out. We also sent an email to people to subscribe to our newsletter about this, moon.com. If you want to subscribe to our newsletter, we post, every 2 weeks about just like DeFi trends, free. So yeah, we got Brad Frenchies, or Bad Frenchies. Are you there?
My name's James, just like the other James. And questions for him. It's a meta question around what's going on here. James, I think of you as the Ethereum guy, especially after your hilarious takedown of Cardano on that interview with Dave Lee. Was there a tweet I missed? Have you switched teams, or is this just riding both horses? And secondly, I don't really know what an index token is, but I guess it came out in the discussion just of late here. I think this is a proposal for an index token to be created that we could go out and, as investors, buy and use that to track everything going on in Solana. Is that it?
Yeah. Hey, James. I haven't switched horses or anything. I'm still a mega Ethereum fan and bull, but I think I don't have any allegiances. I think it's very dangerous and just mentally unclear to have allegiances. I think basically in crypto, everyone is fighting over which coin best. And it's just kind of like a very silly position to take this early in a technology cycle. We are all in crypto and swimming and breathing it day to day, but most people don't hold it. And certainly 99% of people today in real life have not used any of these protocols that we're talking about on this call. So it's extremely early and the opportunity is vast. The design space is vast. We've already launched, as a Moon, we've launched 2 tokens for the Ethereum ecosystem, DFI and DMX. Those are index tokens. And we launched one for the Polygon ecosystem about 2 months. So our goal is not to pick one that is our favorite. Our goal generally is to serve all the kind of different flavors of crypto and make investing in this asset class and this kind of space more accessible. Also, Twitter is very finicky about what stuff it shows to people. I find that often it will only propagate stuff that's very controversial or very memey. So even though I have, I think, a pretty diverse set of views and criticism of everyone from Ethereum to Solana, it doesn't propagate evenly. That may explain some of the optics, just on Twitter at least. But on index tokens are very much in spirit similar to ETFs in traditional finance. ETFs really democratize access to stock investing for the average investor. So instead of picking a single stock, you can pick a basket, and then you get dozens or hundreds of stocks in a single ETF, a single instrument. And we really wanted to bring that same use case and the benefits of indexing to blockchain investing. In crypto, it's even more scary to pick single tokens. If you pick the wrong one, it could be down 90% overnight. So diversification and having some lens of quality is very helpful for the average investor or for the new investor coming into the space. Our key idea is to build an index token. So for DFI, for example, our token for Ethereum, it captures the 8 largest projects on Ethereum into a single token. And for Solana, SOLI being the ticker, we're tracking basically 7 of the most important projects, including Solana itself, and putting that in a single token. So if, as an investor, you want to go beyond just owning the base token of the L1, SOL in this case, and you want exposure to all the exciting protocols being built and being talked about on this call, like Tulip and others, you can just simply own this one token, and it would auto rebalance and give exposure to 7 protocols initially and additional protocols as time goes on.
Cool. All right. Great answer. Thank you.
Thank you.
Nice. Thanks. Next, I'll bring Bryant. Bryant, it's a cool picture you got. Cool PFP.
Yeah. What's up, guys? First off, very cool AMA. Second off, I see a couple of very cool PFPs in the chat here. Looks like we got some fans of monkeys, which is awesome. My question is for Z here. I had a two-parter question, but you already answered half of it. My second part is, do you guys have any sort of idea if you're going to implement any sort of governance for SOLI? I think we're entering a time in the ecosystem where a lot of projects are very community driven, where as an investor, I'm looking for a project that is going to want to hear my voice. So for example, if I want to have an idea for one of the tokens you're going to implement to SOLI, how are you guys going to take that up?
Yeah, for sure. I think that's a big part of the reason why we proposed the SOLI index to the community about a month ago, just to gather that kind of initial feedback from our existing user base and also from new potential users. But yeah, we've been reaching out on Reddit, Discord, Twitter, Medium, just to try and find that engagement from our community. But yeah, we're super keen to hear our community's voice. So if anyone has any ideas or like contributions they'd like to share, please like hit us up on Discord or Twitter. And we make extra effort to make sure we answer every single person out there. And regarding your question with governance, every change to the index or every change to the methodology and every change for constituent will go through a governance vote. We don't have a governance token at the moment, so that's important to note, but we do allow holders of our tokens, so that may that be Pico, DFI, or DMX, to vote in our governance snapshots. Yes, definitely. Community is really important to us, and we're excited to hear what you guys have to say and bring to the table as well.
The essence of it is, right now, we don't have a governance token as a moon, as like an organizationally wide, but we are taking governance, like all the voting and signaling on the coordination, we're using the index tokens themselves. So if you own SOLI, you participate in SOLI governance, if you own Pico governance, and so forth.
Right. Thanks for the question, Bryant.
Yeah, thanks for answering, Z.
Carson, you have a question?
I do have a question. I am part of the 𝕚𝕚 team, but I have a question for the representatives from the protocols. I am curious about, with Solana in general, I know we talked about the community a lot, but I also am curious about the developer experience, given that it is rather unique compared to developing on Ethereum. And although I would have thought that would have been a barrier that would have slowed growth, obviously the growth has been huge. So I'm just curious to hear from the protocols about their experience so far developing on Solana and how that community has been.
I could share my experience. There's a couple points that stand out to me. I actually really enjoy working with a lot of the teams. Like we partner with a lot of the teams. And I feel like the whole barrier to entry with Rust attract a higher quality of developer, maybe. And also we tend to see not only like good developers, but I feel like there's like a good, I don't know if everyone else sees this, but I feel like it's less competitive than other blockchains. I feel like there's more collaboration, more, or at least from our perspective, we try to be a good ecosystem partner and collaborate more. For example, like there's a lot of things that, you know, that we build that we just share code for, or just, we built also like some on-chain programs that help us that we've just shared with other people and just made it really easy. And vice versa, I feel like we've gotten that from some other partners where we just share. So I think that's, I really like enjoy that sort of energy and that spirit where we're helping each other out. The Solana is also very early, so there's still a lot of raw parts to it in terms of really trying to get to composability. Like I think everyone complains about bumping up against the transaction limits. And so I know we have like different groups where we talk about different ways to, you know, optimize and try to get under that, or so we can fit in some features or requests that people have or something, or improve something. I think overall it's been great. And one reason why I think the momentum keeps growing is because good people are building up the tooling alongside. Anchor is amazing.
Yeah, I definitely really echo like the developer community really supporting each other. I think especially like earlier this year when the whole Solana summer thing was taking off, it did just feel like the entire developer community was just trying to learn Rust together, and then build tools, share tooling with each other. And yeah, it's just kind of, it's new for everyone, right? So it's just everyone trying to figure stuff out together. And I also do, like, the only thing I'd also add that's kind of interesting is like the Solana Foundation people are just a really good support and some good developer leadership. There are, like, we talk a lot with Justin and Jordan from the foundation who wrote like a lot of the Solana program library stuff, and obviously like Armani. It is interesting to be working on this like really like framework, new way to like paradigm of thinking, but having this like strong kind of developer leadership is pretty useful too.
Awesome. Thanks, guys, for the feedback. And thanks, Carson, for the question.
Hey, I have a quick question. Maybe this question has been asked before, but for the index token, do you actually get the passive income out of the tokens you hold? For example, there's some option strategy in Solana chain. Maybe you can get a passive income in addition to the just passive hold the token. Thanks.
Yeah, we have been looking into this. There's actually been suggestions from the community to put MSOL instead of Solend. So yeah, we're definitely looking into like staked versions of the tokens and to use them like when and if possible. I think one of our biggest barriers with our experience with Pico is that liquid markets for staked tokens are not as liquid. So it really would have to depend on the type of token and the type of asset that we're trying to include in the index. But yeah, definitely a consideration for us.
Yeah, one example I'm looking into right now is GMX strategy. If you look at GMX protocol, you can hold a bunch of BTC, ETH, Uniswap, a bunch of almost index, but at the same time, you're earning the trading revenue. So it's just not passive sitting there. So I like that kind of strategy. I hope you guys have implement something similar.
I was just saying, I think definitely for this, one very common source of feedback is we including from our own team, is that we index tokens mirroring ETFs make sense on that level, but also like DeFi is super different than TradFi, right? In TradFi, the assets basically become inert the second you hold them, but in DeFi, there's so many things you can do with them, and you losing that utility is like a bit of a bummer. And for kind of more power users, it's a deterrent to own index tokens. We are definitely very cognizant of that, and we want to address it either in SOLI or in future products. So I think the first step we're taking in that direction is, as Zoe said, that the goal is to basically use the liquid staked version of the SOL token in this index. That way you get around 6% yield off that piece. So I think, but that's very interesting already. That is like an index token that bears yield. But in the future, we definitely want to expand on that functionality. Thanks.
All right. Thanks for the question. How about the 8TE API?
Hi. Are you planning to open source the code base? Because we've seen in several Solana projects so far that teams have been very reluctant to open source the code base.
James, do you want to take it?
This is for the SOLI token itself?
Yeah, SOLI token, probably the strategy around. So
sure. The strategy is very open. We publish the spec. It's up for anyone to use and to be inspired by. The smart contract itself, I'm not sure what the terms are. I know on the Ethereum side, what we've done is using a very standard license, and people can certainly, I believe, tap into that. I don't believe there are hardcore pieces of closed source code. I think we follow pretty standard industry conventions on that.
Yeah, sure. Thanks for that. Second unrelated question. How do you guys manage the kind of tracking error? Because in index tokens, there's always some form of tracking error that you'd see from the index. So how do you manage the kind of, let's say, the time between someone wanting to put more money into the token to the time that you're able to deploy those funds in buying those assets?
My understanding is, I think in that scenario you outlined, the tracking error should be practically non-existent, because if you think about what's happening underneath, especially if you mint a token, right? If you swap, for example, let's say you don't mint. Most common case is people just buy these off the DEX like Radium. When you do that, the constituent composition is known ahead of time. unlike ETFs are published daily of constituents. But ETFs have this tracking error partly because there's an index and an implementation of the index. We're not using someone else's index methodology and trying to track to that. I guess we're the primary authors of that. And the way we think about it is like it's a target allocation to begin with, and then it basically reflects the market cap and liquidity of those protocols. I don't think there is a kind of static correct answer. It's more depending on how those change, the index composition is reflecting that. Before you buy any of these index tokens, you can go to our website and see what that composition is. So it's not like the real version is drifting away from the ideal version between rebalances. I think at any given moment in time, the token reflects the live underlying. So prior to buying, you can see what the relative composition is. And if you're satisfied with that, and I don't think it's humongously different just day to day. If you're satisfied with that, then what you swap is what you will get. And of course, in addition to that, we do the rebalances, which may be monthly or quarterly, depending on kind of the situation and the feedback. But yeah, I think anytime before you commit, you can get a full picture of what it is you're getting into. And the rebalance methodology is very clear about when that reset will happen.
I just wanted to touch back on the first question. Actually, I'm Jack. I'm also on the 𝕚𝕚 team, the product lead for our tokens. You raise a great point. One of our biggest troubles in building this token has been a lot of the closed source projects that we've had to integrate with, and since they're closed source, we've had to essentially reverse engineer a lot of it. It's definitely been a big pain point in the Solana ecosystem, but it's something we're seeing more and more transition toward, like what you see in the Ethereum side, more open source. For Radium, for example, we got their SDK open source like about a month ago after working on Solana for two or 3 months prior. But yeah, right now we're undergoing auditing and plan to open source things sometime near in the future.
Great, thanks for that.
Yep, thanks, Jack, and thanks for the question. So it's been about an hour, 15 minutes now. We planned an hour. What do you think, James? Should we wrap it up?
If there's one more, we can take one more, and good to wrap up, I think.
Hi, thanks for inviting me up. James, big fan. I've been following you since the ARC days, so congrats on the pivot. My question was on methodology. Helpful to know the categories you're looking at are market cap and liquidity. Have you also thought about, or I wonder how you think about allocating a certain percentage by categories of protocols? For example, you mentioned, I think 5 or 6 that are in the basket. If all 5 or 6 happen to be just DEXs or lending and borrowing protocols, you miss out on some of the emerging. The equivalent on the Ethereum side would be DeFi 2.0 space, where you have protocols like ℚ𝕦𝕚𝕚𝕚 and onboard that are providing liquidity as a service. So I'm wondering how you thought about including a percentage of the allocation to not just the top by market cap and liquidity.
Yeah, that's a really good question. And I think a potential idea for a different product as well. I think my biggest qualm with that would be like, say you wanted to include a token and you want a section dedicated to like gaming and NFTs, for example. It'd be like, hey, there's 6 different projects on the ecosystem that are in the gaming and NFT space. Like, how would you allocate that? How would you determine like the percentages of a share of each constituent? And then also finding like an unbiased way in order to like hard code this into a rebalancing mechanism. So I could potentially see that in a product where, you know, you just straight out have fixed percentages. We'll do 10% borrowing lending, 10% to yield aggregation, 10% to gaming, 10% to NFTs. But I think for this particular product or this particular methodology, we needed some sort of like metric or some sort of data that we could like hard code in order to return like an unbiased and objective approach for our index methodology. But yeah, a really good suggestion and definitely something we can consider for the future.
I think, thanks for the question as well. I think it's also a reflection on the kind of state of how early we are in the ecosystem. It's not our intention, of course, to include or to bias certain perspectives or certain like sectors in what's available. I think the way a gaming or NFT or some other novel use case project gets into the index is kind of just through the system maturing by itself. I think in a way we built the S&P 500 index or the NASDAQ index when there was only 50 tech companies. So the amount of things we could realistically select is still quite small at this point. As Zoe said, we do need, just for practical indexing purposes, we need a minimum bar of liquidity to make rebalancing and inclusion possible, or else every time it rebalances, it just spikes and is too influential for the price of the underlying token. So like Solana as a DeFi ecosystem is like a year old maybe. So it's just so early. But I think over time, as it matures, as some of the NFT gaming projects grow in worth and just size, they will naturally raise to the top of the kind of market cap ranking tables, and just by our methodology will naturally become incorporated. So I think today it's a bit heavy on DeFi, reflecting the state of the ecosystem of Solana, but it won't have to be 6-12 months down in the future. And obviously, coming from ARK, a big fan of thematic products that I think take a defined view of focus up front, I think are very interesting. Maybe there's a room for a cross-chain metaverse index or something like that. There are many ways of cutting, and we're certainly interested in all of them. And I think those would address like investor needs more directly if they want to take a particular point of view on a theme that's developing in crypto. And yeah, if anyone has ideas on what would be a cool like concept they'd like to see for that, we're all ears. Tell us on Telegram, tell us on Twitter, Discord, whatever channel you like.
Yeah, ARK is exactly like that. You guys had 5 different or maybe 6 innovation platforms, and you had certain assets and percentage dedicated to each, and you'd pick based on your criteria the top ones to include for each of the 5. So it would be interesting to see something similar. I know we're early in the space, but maybe eventually when the space matures to start taking thematic views.
Definitely.
Hey, James, sorry, one other question for the Moon team. Can you talk about fee structure? Is it a % of AUM? And also, is it, I think in the TradFi world, there's closed-end and open-ended ETFs where I think closed-end, you have this scenarios where you start trading above or below NAV. Is that also going to be the case here?
Yeah, so fee-wise, our Ethereum products are just short of 1% in management fees, so pretty accessible. For SOLI, the proposal is for 1.5% management fee, and likely we'll waive that for the intro period when the product launches. As for the structure, it's fully open-ended. In DeFi, all these index products are you have control and ownership of the underlying, and the mint burn mechanism is available to every retail investor as a simple widget on a website. So creation and redemptions are dynamic, basically in real time.
Awesome, thank you.
Thank you.
Okay, we'll do one more. How about Curtis?
Hey, appreciate the AMA, appreciate the space. Do you see SOLI an onboarding for new people into crypto? Like instead of the retweet, the different tasks you have to do to try to earn tokens or coins or a share of a release, or tie it to a game where you are rewarded with the amount of time someone's on it or what their rewards based type of thing? Is this another way to get people on or into crypto to then get them get their feet wet, have them understand a little bit more, and then it's a whole lot more palatable? They can learn as they're going while still having exposure. Is that kind of the thought process behind the index token, or I guess what you're trying to do with SOLI?
Hey, thanks for the question, Curtis. I would describe it as a lower risk and like mentally more accessible way of investing in crypto. If you're buying stocks in the traditional stock market, picking stocks require a lot of mental energy, and it gives you very specific risk exposure when you own a single company stock. And the benefit of ETFs is that it gives you a diversified exposure, and you don't have to think about it almost after the fact. It's a set and forget strategy, whether you own like a S&P, NASDAQ, or thematic kind of an ETF. We don't really have that in crypto today. There are a few options, but it's not really the norm. Part of the desire is to take the intimidation factor out of crypto. Do you want to pick a single token? Does it have good governance? Does it have really horrible inflation schedule? Does it have like very bad liquidity? There are all kinds of things that I think are barriers to adoption. And just as ETFs kind of democratize investing in traditional finance, I think index products, index tokens provide that kind of benefit for investing in crypto. So for anyone who is bullish on the Solana ecosystem and they want to go beyond just owning the Solana token, SOLI is a great solution to that. It will give you a good amount of exposure to Solana, but it will give you even more exposure to all the protocols that's being built on top of Solana.
Appreciate that breakdown. Makes sense.
You want to do one more?
Hey, appreciate it, guys. James, appreciate you being on all these spaces. Quick question, I think, just to wrap it up, seems like you guys are at the end. What's the way to access the SOLI token? Will it be available just if it's on Ethereum through a Uniswap type setup, or is it directly connecting to a wallet through your website? And then what is the date that's available? I just came on this in the last 20 minutes. So I'm sure it was covered in the beginning, but maybe anyone else that added on that's interested can find their way to get to this token when it becomes available.
Sure thing. The token is not released yet, so we're currently building it. We are testing it internally. Right now, we are hosting this just as a way to facilitate comments and feedback. We're hoping to release it somewhere in the kind of early 2022, probably Q1, even early Q1 of next year. The token is native to Solana. Effectively, you would need a Solana wallet. Phantom is probably a great place to start. And if you're not on Solana right now, I think you can probably experiment with just trying to use some of the infrastructure. Basically, if you're used to MetaMask, I would just download Phantom and then try it out. And I think we will be, the SOLI token, call it February, just to be conservative, should be available on a major exchange like Radium in the February timeframe. And if you have a Phantom wallet, you can custody it there. And it's just like buying any token on Uniswap, but it's a Solana exchange. And yeah, it's pretty straightforward from there. You just swap whether it's USDC or SOL for SOLI, and then you'll have it in your wallet.
Yeah, it makes sense. Yeah, my bad with the noob Uniswap question there, but yeah, got it. Thanks.
No problem. Thanks for the question. Tyler, should we wrap it up?
Yep. Thanks everyone for the questions, and thanks everyone for joining. We'll probably have another one of these, definitely pre-launch, where we explain the final details of SOLI. Right now in the Medium article, there's weights of each token, or all the constituents, but those will very likely change before launch. What else, James?
Yeah, I'd say follow us on Twitter, subscribe to our newsletter. That way, any changes and closer to launch date, if we have any promos, you hear about them.
Definitely. Thanks everyone for joining.
Thank you.